Welcome to Cat Eye US Stock. We watch markets with calm focus and sharp instincts. Friday, January 9th, 2026, looked bullish at first glance. New highs for the S&P 500 and the Dow. The Nasdaq was up too. But under the hood, this wasn't a euphoric melt-up. It was a reshuffle. Money rotated out of parts of the crowded AI mega-cap trade and into cyclicals, energy, and a few very specific stories. Think more portfolio reallocation than a fresh risk binge. Zoom in on the S&P Heatmap and the story sharpens. Yeah, the screen's broadly green. But the real strength is clustered, not universal. Industrials are lit up together. Energy tiles, especially the big integrated names and refiners, are firmly green. Housing and other domestic cyclicals show up too. Meanwhile, the mega-cap AI names are no longer one solid wall of leadership. NVIDIA stalls, Apple is roughly flat. And instead of defensives getting dumped, utilities and other safety pockets stay resilient. It's breadth on the surface, but with a narrow backbone doing most of the lifting. That heat map sets up the core tension. The softer jobs print keeps the soft landing story alive, so buyers stay in the game. But they're not just doubling down on the same AI generals. Instead, they're redistributing risk into industrials and defense, into energy and housing-linked names, into hard assets like silver. The tape says, we still believe in the cycle, but also, we're not blind to policy and geopolitical risk. That's the backdrop for today's stock stories. Less about one or two tech titans, more about how different sectors and propsies are being repriced for this new mix. On the rumor mill, NVIDIA was the lightning rod. Message board chatter fixated on a stock that feels, quote, controlled into place after a massive run. At the same time, traders talked up money rotating into Intel, Broadcom, and other second-line chip names. None of this is hard data on flows. It's opinion. It's desk color. But it captures the mood. People are questioning whether the AI trade is shifting away from a single hero stock toward a wider cast of beneficiaries. Venezuela is back in focus after signals from the Trump administration suggested a tougher posture toward Caracas, bringing the country's oil supply risk back into the market conversation. While there's no confirmation of direct action, headlines alone are enough to shift expectations. Venezuela holds some of the world's largest proven reserves, but years of sanctions, underinvestment, and political instability have left production fragile. Even the possibility of escalation or policy change forces traders to reassess supply risk. Crude prices and energy stocks are reflecting that uncertainty premium, not a change in fundamentals. This is a familiar market pattern. Prices move on perception first, facts later, and traders are watching whether rhetoric turns into policy. Intel stole the show on the semiconductor side. The stock ripped higher, helped by favorable commentary from Donald Trump and renewed optimism around its AI and chip roadmap. Crucially, this wasn't just a one-off pop. Intel became the symbol of capital, rotating out of a crowded NVIDIA trade and into an under-owned, politically favored legacy semi. For investors, Intel is now a real-time gauge of whether the AI hardware build-out is broadening beyond a single leader and toward a full ecosystem of suppliers. Oklo turned into a live-wire story stock. After Meta agreed to back a massive nuclear campus in Ohio and prepay for future power, the market suddenly saw Oklo less as a pure concept and more as a project-backed growth name. The stock extended a huge gap higher, with options and pre-market activity showing speculative money piling in. In one move, Oklo became the emblem of a new theme. AI isn't just about chips, it's about locking in baseload power for data centers. That's a different, more infrastructure-heavy leg of the AI trade. Energy names quietly became central to today's tape. Exxon and its peers rallied alongside a sector-wide bid, helped by renewed confidence in hydrocarbon demand and constructive commentary on capital discipline. Then the late-day twist, Trump signaling a tougher stance toward Venezuela, which revived regime risk worries around its crude supply. Markets don't have hard policy changes yet, but they're already pricing a bit more risk into oil. For equity investors, energy is now pulling double duty as a cyclical reflation play and as a hedge against geopolitical and policy surprises. It wasn't just stocks that caught a bid. Silver ripped higher, pushing the SLV ETF up as spot prices surged on the back of softer payrolls. The move folded hard assets into the same soft landing Fed pivot narrative driving equities. That matters. It tells you investors aren't simply embracing risk, They're hedging policy and inflation uncertainty with real asset exposure. SLV became a clean, liquid way to express that blend of reflation hopes and caution about how the next phase of policy plays out. NVIDIA, the market's AI kingpin, actually finished the day slightly in the red. The news flow stayed bullish. Analysts and CES buzz kept the long-term story intact, but the price action said something different. Capital is fanning out. Intel and Broadcom were the ones adding points to the indices, while NVIDIA essentially marked time. That stall is less about the end of AI and more about leadership fatigue after a huge run. From here, how NVIDIA trades will be a key tell for whether investors come back to the old leaders or keep pressing into the new ones. Tesla kept its momentum, climbing about 2% as the market leans further into its AI and robotics storyline, not just its EV roots. That move is important in context. Even as investors rotate away from some stretched megacaps, they're still willing to own high-beta discretionary names that offer AI optionality. Tesla sits right at that intersection. Its behavior around upcoming macro data will tell you a lot about how much risk appetite remains in consumer-facing AI plays. Defense stocks also joined the leadership roster. Lockheed Martin moved higher on talk of a much bigger future defense budget and a supportive analyst call highlighting better program visibility. In a tape once dominated by tech, Lockheed and its peers are becoming another structural pillar. They're tied to geopolitics, to fiscal policy, and to a world that's still rearming. For diversified investors, that means part of the market's strength now rests on themes well outside the usual AI and cloud complex. Looking ahead, the market's rotation is about to get stress tested. Inflation prints like CPI and PPI will either reinforce the Goldilocks narrative or force a rethink on Fed cut timing. Housing and manufacturing data will matter for the very cyclicals that led today. And on top of the macro, evolving Trump-era tariff and defense discussions, plus that tougher Venezuela tone, keep policy risk front and center for exporters, energy, and defense. The question into next week isn't just, do stocks go up? It's, does this new leadership mix actually stick when the data hits? To wrap it up, Friday's session was less about a market racing higher and more about a market reallocating. Records for the S&P and the Dow, yes, but driven by a changing cast. Energy, defense, industrials, hard assets, sitting alongside a more selective tech and AI exposure. Investors are leaning into the soft landing story while keeping one eye on inflation, on tariffs, on Venezuela, and on defense budgets. As the next round of data and headlines lands, we'll see whether this broader, more balanced leadership can carry the tape, or if the market is forced to reshuffle again. Thank you for watching Cat Eye US Stock. Stay curious, stay calm, and we'll see you next time.